Welcome to another 144 Analytics video with educational and actionable information on how to use the Fibonacci retracements. With a few simple rules/guidelines, we will explain what has happened and what to look for going forward. A couple simple rules. 23.6 and 38.2 should send you to new highs or lows depending on the direction you're going. Failing to do that sets up other situations, and we will explain that in a minute. 61.8 and 78.6 usually get you to have retracements that will go, if it hits 61.8, it will reverse or retrace 61.8 of where it just came from. Basically the same rule with 78.6. As always, with these rules, you'll just constantly be following all the retracements as we move along. Now, we did do this video, but we also did it on our blog in just written out, and we explain on the weekly chart what these important lows were here of 38.2 to the all-time low, and then 61.8 to the all-time low, and what happens. Now, that first rule of 38.2% should send you to new highs. Well, the rally happened after holding 38%. This movement in between this 38% and this failure to make the new high, new all-time high, is subject for a whole nother video that has a lot to deal with 61.8 to 61.8. But for this video, we just want to keep you to see, or we just want you to see how when the market's turning and how to kind of key in on that. Now, as we said, this market failed to hold 38.2, and the basic rule, or failed to make a new high after hitting 38.2. As the rule goes, if that's the case, we then look for 61.8. Now, this is an extreme example, but that is exactly what happened here with the pandemic kind of break, but all it did was take it back into 61.8. Now, we also see here that retracing back to the low back in October of 18, that this low held exactly 23.6%. The failure to make a new low also just reinforces that something's changing. Not necessarily the whole trend. It's always 38.2 that needs to be taken out to say that that has happened. And that is exactly what did follow. Now, the key to this is that once the trend 38% was taken out, as you just saw there, we can start using 38 back the other way. And that's how we'll tell if this trend is going to continue or if it is turning again right back the other way. So in this case, the first rally here, all within a day, but still be at the same, 38% was all it could do back to that high. Then to a new low, which should follow. Here we have this low here. Well, all they could do, 23.6%, keeping it even more negative than that. So now we take it down to what we know is 61.8 to the all-time low. So that tells us we should be at least looking for 61.8 back up. But we're also going to watch what the levels are. As we said, if the market's going to continue down, it should stay below 38.2%. This is what it did here. But just like here where it failed to make that new high after holding a retracement, it failed to make the new low to keep the trend going. Now, there are two things. One, we took out 38%, which told us we should now look for 61.8, but we already were looking for that because we knew we hit 61.8 down here. This may get confusing, but all these rules, guidelines are on our website for free. You can just click on them and go through it. We have all the examples like this, plenty of them, plus all the other markets we cover. Now we start watching here, and now this traded below 38.2%, but it never closed below it, and that's the key to this, and that's what's telling you, yes, the market really has changed. Once we took out 38, it was telling us, but now we're going to make sure that And here we go to 38 back. Now we hit that 61.8 that we talked about. What did it do? All it could come back was 23.6%, keeping the market extremely strong. Then they go all the way up to 78.6%. And again, here, all they could do, and this time they couldn't even get to 38%. That's how powerful the market is. Now, when you get into these extended runs like this, that's when we have to start using new lows. As you see here, it's way below going back here. But now if we take the next two most important levels, which this is an eye thing. I mean, you got to see that stands out, this stands out. No other way to explain how to say what low other than the ones that stick out like sore thumbs. So we go back here, and what did we hit? 23%. And if we take that low along with it, it was also 38%. Same thing here again with this, 38%, and then 23%. Again, going on to new all-time highs. Now this brings us up to where we are today with your actionable information, is that we know that any market that's going to stay extremely positive is going to hold the 23%. So that's what we're looking at right here, right around the 166 area. It's an area that obviously you can buy against, and knowing that if any rally from here should take you to new all-time highs. And if they take this level out, again, as we said, it would still have to take out 38% of the whole move to say that this whole bull run is done. Obviously not what we're talking about here, but another reason this thing needs to hold this area is just the 200-day. But this is all about the Fibonacci retracements, and that alone, if it takes this area out, then obviously, as we said before, you're going to be looking for 61.8. So as for right now, we should hold this area right here. And if we do, look for new highs. And just because it is new highs we're looking for doesn't mean you won't do this. Won't take whatever low we have here and watch these retracements back up. Because as you can see right here, it's all real tight, but they've already hit 61.8 exactly just in this little break up here. So that's what you want. When you have bigger levels below and they start resisting to shorter term levels, you got to keep an eye on that. That's a sign of possible weakness in this case. But again, this is a huge area into 166, so keep an eye on that. And please take a look at our blog, and we have all of our rules, guidelines, examples, plus all the other markets we cover. Also, please look at our other videos we're doing and subscribe. We'd appreciate that. And until the next video, good trading.